Hello and welcome everyone to this session on green finance, on innovation in green finance here at the Economist Impact Sustainability Summit. With our distinguished panel, we'll spend the next 30 minutes or so talking about enhancing the effectiveness of green finance. Not on the need for green finance, we'll take that as given, but innovations in green finance. And that's innovation in products, it could be new processes, new ways of framing, thinking about, and doing things so that we end up with more funds channeled towards green objectives. What's working? What's not working? What should be scaled up? And how? What are things to watch out for? Are there any side effects or unintended consequences? So let's dive straight in. We'll hear from Daniel, Katherine, and James in that order. One round of opening remarks and then Q&A. So first up is Daniel Hanna, Standard Chartered Bank, Global Head of Sustainable Finance. Daniel, over to you for your opening remarks, please.
Great. Well, first of all, it's a pleasure to be here with such a distinguished panel talking on a really important subject in terms of innovation in green finance. And it has to be said at the outset, the growth of green or sustainable finance has been probably one of the areas of good news in otherwise a set of challenging years for all of us with COVID and geopolitical events. And if you look at what happened just at the end of last year, in 2021, sustainable bonds reached over $1 trillion, spearheaded by the launch of green bonds, but we're starting to see sustainable bonds and transition bonds also emerge. That's a 20-fold rise from 2015, and it now accounts for almost 10% of global debt markets. So sustainable bond markets are becoming quite systemic in terms of how we see the bond market growing. Sustainable linked loans surged more than 300% to $700 billion. And that's more than 3 times the figure of the previous record. So we are seeing this growth of sustainable finance really having huge momentum. But we actually need a lot more to happen. The new financing required to keep global warming to an increase of just 1.5 degrees may be as high as $8 trillion annually, while the United Nations estimates that the funding gap to support the Sustainable Development Goals is probably as much as $2.5 trillion a year. What has really got us to this point of these record highs in sustainable debt markets is not going to get us further to reach the goals that we really need to see, the mobilization that we need to see to reach net zero and transition the economies of the world. And to do that, I think we're going to need to see 3 broad things. The first one is innovation, the title of this panel. The second is very much standardization. And the third is democratization of sustainable finance. To really focus in on the innovation side, I think what we now need to see, having established this great growth in things like green bonds, ESG funds and the like, is we now really need to see a lot more innovation that connects direct investor interest with impact. And that can be through a variety of different products. In the last year alone, Standard Chartered launched 20 new products ranging from things like ESG repos to sustainable trade finance. And we need to see a lot more of that. And I think there are sort of, if you like, a few sub-segments of what kind of innovation that we need to see. The first is we need to take the sort of the real strength that we've seen in the growth of green finance and start seeing a number of different shades of green. I think Mark Carney talked about 1,000 different shades of green. And really, this is about the theme of transition. I think we now have a very well-established market for sourcing financing for renewables and other very clear green products. But actually, where the hard progress that really is needed now is in moving heavy, intensive carbon business models to more sustainable models over a period of time. And this transition finance is really critical. And that's why we launched the first transition finance framework last year alongside our net zero commitment to be net zero by 2050 and our interim target by 2030 and a $300 billion commitment to transition finance over the next 10 years. And we've also seen a number of key transactions this. We were involved in the first transition bond from the aviation sector for Etihad Airlines. And we're seeing the first combination of transition and sustainability links coming together. And this can also include KPIs for reducing emissions, where if people don't hit them, they have to buy carbon offsets in case they don't miss those targets. So I think shades of green transition finance is critical. The second one is we need to see green become a rainbow. It's not just about climate. That's obviously the key mobilization issue at the moment, but we also need to see things track across a number of the other sustainable development goals. We were involved in the world's first blue bond for the Republic of Seychelles that raised financing for a sustainable ocean economy within the Seychelles, but also worked very closely on things like orange bonds for gender equality, including transactions last year that supported 250,000 underprivileged women in South Asia. And so I think a rainbow is also something that we need to see emerging. And then finally, I think when we start really thinking about catalyzing these new areas, blended finance becomes really critical. Now, blended finance is where you mix development finance or sources of philanthropic or development aid with commercial capital to kind of provide either greater financing in terms of quantum or better terms. And we've worked with whether it's the Asian Development Bank in terms of financing solar plants in Vietnam, or in some of the other transactions in terms of generating funds for gender issues or other climate impact areas. For example, we closed a transaction that provided clean water to 2 million people for the first time in Southern Africa last year. So these sorts of areas around innovation, I think, are going to be absolutely critical. And then beyond that, we need to see much greater standardization and also much greater democratization. The countries which have the greatest threat from climate change also have the greatest opportunity to transition over the next few years.
Thank you, Daniel, for your opening remarks. And it really does, once you start cataloguing them, it really looks like an impressive set of developments in the last year or two. But every time someone mentions shades of green or the rainbow or blending, one of the concerns I have is, does it take us away from holding each line item accountable within that package? So I'd like to come back to you with a question on how do we tackle the fear of greenwashing? So hold on to that and I'll come back to you as soon as I've made the rounds. Katherine Brown, Vice President, Inclusion, Impact and Sustainability at Visa Europe. Katherine, over to you for your opening remarks, please, and welcome.
Great. Thank you, Lutfey. And it's really just a pleasure to be here with all of you today, and especially on this incredibly important topic that I think we're all incredibly attuned to and people the world over are becoming even more attuned to. So it's very important for each of us to, from our industry standpoint, start to put a bit of a fine point on where we're actually going and what we're trying to do, very much as Daniel said as well. What we're trying to do and how we're trying to achieve it through the power of our ecosystems, right? So from my standpoint here at Visa, the key question, of course, is what is the role of payments, the payments industry in enabling a sustainable future and in enabling sustainable behaviors? Because we as an organization, we have been deemed carbon neutral in 2020, so we're already carbon neutral now as a company. We have ambitions to be net zero by 2040. In total, and climate positive company ongoing, but that as us as an organization, as an entity. The reality is we have huge influence in terms of enabling sustainable behaviors, and Visa does believe that thriving economies require healthy and sustainable planet, and that furthermore inclusive and sustainable economies uplift everyone everywhere. So those like us in the private sector who have purpose-driven models play a critical role in accelerating climate action across the economy. And I think all of us on the panel here today, we don't need to be told twice, we all agree that the 2020s is in fact the decisive decade for climate action. So we all have a role to play to bring everyone within our ecosystems into that transition, as I mentioned. So maybe perhaps today, Lutfey, I can give you 4 key examples or 4 areas that we lean into on how we approach this. So the first is you won't be surprised, helping the overall commerce ecosystem to understand better the barriers and the drivers of consumers around sustainable living, because knowledge is essential for effective behavioral change strategies. And just recently, we actually have 3 bits of research that we have released to help illustrate this sort of agenda, this cause, if you will, and where consumers are. So the first is a partnership that we launched with GlobeScan. That was a 30,000 person, 31 market wide study, which really underscores the intention to action gap faced by many sustainability minded consumers these days. And just to give really rough numbers, 40% of consumers said that they really genuinely want to change their consumption behaviors and their behaviors in general a great deal, whereas only 23% have actually been able to make those changes in the last years. So there really is a gap to be closed there. Another layer of that research is around a bit of a bespoke bit of research that we did on where consumers are vis-a-vis sustainable banking offerings and their expectations, which is partially what informed our eco benefits bundle that I can tell you about in a little bit. But the third piece of research, we partnered with the Cambridge Institute for Sustainable Leadership on very much what is the role of payments in decarbonization. It really is the first of its kind of research to hone in on our industry in particular, for us and for our colleagues as well, to better understand through a framework how can we build really a positive momentum towards net zero. So very interesting data there, really leaning in on how do we enable citizens through products and services and innovation in that space, unsurprisingly providing data-driven insight. We have a large amount of really very useful data in terms of moving consumers in the right direction. Another area is around collaborating and forming partnerships in order to develop new value networks. So outside of the four-party model and working across boundaries a lot more. And then also using the advocacy to promote more persuasive corporate narrative on systems transition. So the second element, that was really that first piece around research and insight. The second area, and you had already mentioned a little bit of this, Lutfey, as well, is embedding sustainability into payment cards and accounts. So helping consumers be more informed of the impacts of their consumption and to have access to context-based education as well as tangible actions to close that intention to action gap. So we partnered with Ecolytic, our inaugural fintech partner, whose sustainability as a service solution analyzes payment transaction data in real time to inform every transaction with individual environmental footprint calculations. And in November, just this past November 2021, we announced the launch of the Visa Eco Benefits Bundle, which is a curated selection of green banking products, including that Ecolytic carbon footprint calculator, as well as enhanced carbon offsetting options, educational content, and rewards options for cardholders, because rewards are very important as well in terms of shifting behaviors. Third piece, or that third element or approach that we take, is really drilling down on specific consumer behaviors and using digital payments and other resources to remove friction for more sustainable behavior. So a very concrete example of this is around urban mobility, because as we've seen through the pandemic as well, frictionless payment technology, contactless, is critical in a world where no contact and touchless experiences are probably here to stay. So contactless is key for bringing people back to public transportation, building on already growing global trends and movements towards open contactless travel. And then just lastly, a fourth point, we really aspire to support the overall movement to make sustainable living more attractive, rewarding, and attainable. And this is sort of taking it from the millions to the billions, if you will, right? And it's this ambition actually that gets me very excited about my role in Visa, is how can we inspire sustainable behaviors to future-proof positive paths for sustainable consumption. It's just a very small example of this. The role of consumers in the shift to regenerative economy is nascent, but it's already happening if you look around you. And I believe that Visa can be a leader to ensure that it benefits everyone and everywhere. I think that's a perfect area or landscape for multi-stakeholder partnerships to future-proof sustainable consumption and sustainable growth. So I'll stop there. I think there are just 4 areas that I wanted to highlight for you, Lutfey.
Thank you very much, Katherine. Makes a lot of sense, and really, I really like the fact that you are knowledge-driven, data-driven, investing in gathering knowledge and research to inform either your own actions for your own institutional selves or for the customers that you influence. I guess I'd like to know a little bit more about the specific examples through which we as the day-to-day users of Visa can perhaps feel and see the impact of what you're doing in this space. So maybe we'll come back to that. And anything you may want to add on how you think you could, or firms such as yours, could report back on what they're doing so that there's a bit of healthy competition going. So I'll come back to you with that follow-up question. And next up, it's James Alexander. James is the Chief Executive of UK Sustainable Investment and Finance Association. James, welcome. And you've just seen the 2 representatives of the private sector, of their respective industries. What are your thoughts? Your opening remarks, please.
Thank you very much, Lutfey. And really, I think brings together what both Katherine and Daniel have just said, and what it highlights, and what I want to highlight today is that this industry has gone from niche to now being mainstream. Sustainable finance is now a key part of how financial services operates and considers what it does. And I think one of the biggest changes that we've seen is this, I suppose, approach to thinking about that we as financial services actually have a role to play in shaping and changing the economy and the world around us that we maybe didn't think we had several decades ago. We can actually change the world that we live in for the better. We can have an impact on these big social and environmental issues of our time that affect all of us, and that we want to play, as an industry, we want to play a role in addressing these issues. But I think there's also the other challenge, which is we can't be called upon to solve all of these problems on our own. It is not possible for financial services alone to fix these issues. This is going to require concerted action in partnership with financial services, but from governments, from other parts of the private sector, and of course from individuals themselves in terms of day-to-day activities and actions. But I think we do have a key role to play, and some of the key things that we're looking at and working on is net zero. Of course, there's lots of different financial services firms that have made commitments to net zero, not just in terms of their own operations, but in terms of what they're financing and how they're financing it. At COP26, we saw this huge gathering of private sector firms, financial services firms. They weren't there to do what maybe had been done in the past, which was to lobby against climate action being done. It was to lobby in favor of more climate action, to add their voice to the chorus of those calling for more change, calling for more to happen, and helping the governments along to make that progress possible. And we saw there the announcement of the Glasgow Finance Alliance for Net Zero, another acronym to throw into the mix called GFANZ. We saw the announcement of the International Sustainability Standards Board. And all of these activities and actions are helping us drive forward a move towards net zero, towards sustainability. In the UK, we made the commitment, or the Chancellor here made the commitment to become the UK to become the world's first net zero aligned financial services centre, which of course we welcome, we applaud, but we also have to ask, well, what is it? What does that mean? How does that personify? How does that actually come about? And so we're right now doing a big piece of work with our members to start shaping and identifying the regulatory and legislative actions government needs to take and we need to take as individual financial services firms to move along this landscape. We're seeing net zero transition plans across the private sector. They're going to be mandatory in the UK in a few years' time. And we're seeing that I think that's going to have a big, very positive impact because we're going to be able to look at the companies that we're invested in. We're going to be able to understand what they need to do and what they've set out to do. And actually, as part of our role as investors and owners and lenders, we're going to be able to be active stewards of capital. And I think that's a really growing area of work, is how we use our role as owners, as shareholders, as lenders, to make a change in the companies and the real economy companies that we're invested in. Because ultimately, that is what we need to change. We need to change the real economy and get that on a pathway to net zero, get that on a pathway to addressing the environmental and social issues that we see. And I think that is going to play a really big role, that investor stewardship. However, it's incumbent on us as an industry to build public confidence that stewardship works, it's impactful, it's outcome focused, it's actually achieving the things we say that it's going to set out to achieve. And it's the same as greenwashing. We have to do a lot of work to convince people and to show to people that the work that we're undertaking is actually, or the funds that we're offering, or the products that we're selling are actually doing what they say they're doing, that we can align people's values with the investment products that we're trying to get into market. And I think we've got a lot of work to do on that. I'll be very open with that. But that's where regulation is also playing a part. It might be strange to say that for a financial services firm or organization like ours to say that we need more regulation, but actually what we see is greenwashing is something that harms the leaders. It harms those that are doing the most in terms of sustainability and finance. And we heard great examples from Daniel and Katherine a moment ago on the work that they're doing. But then when there are others out there that can say that they're doing the same thing without actually having to have very much to back it up, it puts those leaders in a really weak position. And we need to see the regulatory environment catch up with that. We need to see it so that if you're saying you're sustainable, well, you actually have to be sustainable. You have to match your marketing with your actions. And I think that's a really important part, not only of building confidence, but helping this market to grow and thrive and develop. And that, of course, links to the regulators that we have here in the UK, the Bank of England, the FCA, have got new mandates to drive towards net zero. And that's now been incorporated as part of the mandate of these regulators. We actually want to see that that drive to net zero be incorporated in every decision that government makes, because we think if we're going to achieve it, we have to have as investors the confidence that government is also driving in the same direction, not just to have passed legislation for a long time in the future, but to actually on a day-by-day basis be driving us towards that objective and what we want to achieve. So I think we've got a lot to do, but I think we're coming from a very positive place. We're going in a very strong direction, and what we're hoping to see is this real transition. And of course, it's not just about climate change. I have mentioned net zero quite a few times, but we are very focused as investors on the entire breadth of environment, social, and governance issues, particularly social issues where it comes to modern day slavery, it comes to race, equality, and diversity, where we're looking at the just transition, which I think probably kind of is an umbrella that covers both E and S of ESG, and also other environmental issues. We're looking at deforestation, at water health, and species loss. There's so many issues that we're covering, and it's a really important part of our work as the industry.
Thank you, James. There's clearly a lot to do, and one of my concerns is that do we get lost in the weeds? There's just so much to do, so many players involved, and particularly with the financial services industry, is there a coordination problem where no individual institution wants to get too far ahead of the curve, and so who takes the leadership? My question to you would be, what worries you now that we're here where we are, tremendous wind in our sails? What's the one thing that you think is a concern going forward? I'll come back to you in a moment. Let me go back to Daniel. So Daniel, right at the start, my question to you was actually twofold. One is all of the examples that you gave us individual cases of innovation, highly impressive. Do they really add up to anything material? How can you convince us that this isn't just PR, there is substance and resources thrown behind it in organizations such as yours? And the second question at the other end of the spectrum is that are people like me who are quick to accuse institutions of greenwashing getting to a place where perfection is the enemy of the good? Do we need to be more circumspect about these things?
That's a great set of questions. I mean, let me first of all say, I think echoing something that James said, I think we are seeing a fundamental rewiring of the financial sector. I think the challenge that's put in front of us in terms of climate change and the broader ESG set of issues are increasingly getting embedded into the way that finance operates on a day-to-day basis. And I think the future is already here. It's just unevenly distributed at the moment. As James said, this has gone from a niche area to one that is now mainstream. I mentioned that it's sustainable bonds are sort of 10% of the global capital markets. But if you just take my firm's example, I started with an intern. I now have a team of 50. And I think we are seeing that momentum build globally. But there is so much more to do. We are only doing, frankly, the easy stuff right now. We kind of have a playbook in terms of climate at the immediate stage of electrifying what we can, powering that electrification through renewable power as much as possible. What we now need to start seeing is how do we tackle these hard to abate sectors which are completely embedded into the way that the global economy works. And finance has a really key role to play on that, and we're only just at the beginning. So there's a lot more work to do, and everything I would say is with the humility of knowing that we're just getting started. But to your points around fundamentally the impact that we're having and greenwashing, which I think are absolutely critical, and some of the biggest criticisms I have, if you like, of the sustainable finance industry are on those two things. One, we talk a lot about big numbers, and that's great, right? We do need to mobilize very big numbers. But frankly, where matters as much as how much. And I'll give you an example. We have an annual impact report that categorizes everything that we do in sustainable finance. It shows you it's verified by a second party. It shows the amount of emissions that have been reduced, the amount of money that we have mobilized to certain sectors. And a single dollar invested in a solar park in India has 7 times the impact of reducing carbon emissions from the same single dollar invested in a solar plant in France. And how we mobilize money from Lyon to Lucknow in India is absolutely critical as we start thinking about how we're actually going to make a real change to the world. So this area of impact, I think, is much more important than volume and needs much greater focus. I think on greenwashing, this is absolutely a key area as well. We have set up an internal governance structure with our own committee that basically verifies anything that we say that's green. Our sustainable framework that we put out and our transition frameworks that we put out are there publicly for anyone to look at. The sustainable one is verified by a second party. And here, I think the private sector can do a lot. We're putting out our frameworks. But to echo something that James said, we would also welcome more regulation in this space to kind of create international definitions. But I would caveat it with one thing, and it's to your point around not letting perfect be the enemy of the good. It has taken decades for the world to harmonize tax legislation, which still hasn't happened. We do not have decades on climate change. We need to quickly get to a level of interoperability internationally that allows a common set of minimum standards so that we can start mobilizing this capital rather than spend decades in arguments about how we harmonize.
Right. Absolutely. The demand and the curve of expectations very steep. Katherine, let me come to you, please. I know you're passionate about inclusion. How are you bringing more people into this dialogue and into contributing at an individual level to more sustainable behavior?
Thank you. Thanks for that follow-up question, Lutfey, because it is actually a really very important topic for me, but also for Visa as well, because ultimately, our customer, our consumer is very much linked to the formal financial economy. So the lack of financial inclusion is a stymie, if you will, for even our own strategies for net zero and our own climate strategy. So I think you know as well as anyone that now about 4 billion adults have transaction accounts, and innovations in policy, technology, and financial services, what we've just been talking about across this panel, have led to the inclusion of 1.2 billion adults in the formal financial system since 2011. That's fantastic. That actually does mean that our products and services and our influence can actually touch these consumers and help move them, nudge them into more sustainable behaviors. But there are still around 1.7 billion adults remaining excluded from the formal financial system. So I think actually it was a Moody's back in 2011 or 2015 that said that digital payments advanced inclusive economic growth to the tune of something around 296 billion US dollars and the GDP of 70 developed and emerging markets. And that's equivalent to creation of 2.6 million jobs on average per year. So by expanding digital payments and access to financial services,
Amazing.
We at Visa and others have the opportunity to advance financial inclusion, uplifting the lives of millions of people, but also strengthening economies and net zero strategies around the world as well. So I think it is, for me and for my colleagues as well, operating on a continuum, that just transition, bringing everyone along on the journey. We can talk about all of the different opportunities and strategies we have to actually help those with transaction accounts move forward, but that only counts for as many people as have those transaction accounts. I think I mentioned before the research that we had been running on sustainable behaviors, where people are, where consumers are. In our results for that, that intention to action gap, for example, unfortunately, we're talking about 63% saying that climate change is very serious, and 34% saying that they lack support from companies to actually move forward. And of those who are moving forward, 2.5 times more likely that they're affluent. And that is not necessarily going to get us where we need to go. We need more people to be able to action their sustainable behaviors. So hence why it's really important anyway for us to keep that connection between people and planet.
Harnessing technology and data and all of that to do this. Wonderful. Thanks for that, Katherine. James, I'm going to add to the question that I was going to pose to you. So one is, what worries you most, but also what gives you the most hope looking ahead?
Well, I think that's nice. I can cover it from both directions. I mean, I think we, there are concerns. Of course, there's concerns. One of the challenges, of course, and I think Daniel and Katherine both alluded to this, is matching our actions with the scale of the challenge. This is an enormous global challenge that's going to impact all of us, that's going to require all of our concerted efforts to address. And that's just climate change. There's, when you start to think of all the other issues from nature and biodiversity through to the social challenges that we face, there's so many different challenges. And so how do we match the action that we have with the scale of those challenges? But I think at the same time, we are also now entering a period perhaps where there's more uncertainty, where there's big things going on. We're seeing what's happening in Ukraine and watching, I guess, with horror what's taking place there, and seeing what impact that's having in terms of financial markets as well, and thinking through, well, are we going to lose our focus and attention on this enormous, pressing, global but long-term challenge of climate change, and focus on the immediate? Of course, that happened with COVID, and it's continuing with other things. We're also, I think, needing to start thinking about a lot of our narrative as an industry for the last few years has been, you can have great returns and be green. And if you look at the first few months of this year, that narrative may not continue to play out. What's happening to tech stocks in particular, which have been where a lot of the attention of, or a lot of the investments of ESG firms funds has been placed, they're not having the best start of the year. How are we going to continue to play this narrative at a time when we potentially are not able to say you will still get the returns that you expect, and all you have to do is just move it to a different fund. So there's some challenges here, and I think we've got to play it right. Of course, we've also talked about greenwashing and the regulatory challenges that poses. I think, though, there are huge reasons to be optimistic. There are, the agreement that was made in Glasgow, the countries coming together. There is so much action and progress moving forward. And I'm just talking about the side agreements, the $130 trillion that committed to be net zero over the coming years. We're talking about the amazing announcements coming out from corporates across the world saying, we want to do this, we want to play our part. In fact, you might even argue that corporations are ahead of governments now internationally in terms of where we're moving to on this agenda. There is so much progress, so much momentum, so many people having conversations like this that I think there's huge grounds for optimism that we can solve these challenges and get through this.
Definitely so much energy unleashed, and thank you for that, James. And with that, we've come to the end of our time. Thank you, James. Thank you, Katherine. Thank you, Daniel. Leaves us with, I think, a lot of hope that innovation with intent and inspiration is taking green finance to play a pivotal, if not a leadership role in tackling the challenge of climate change. And so with that, we bring this to a close. Thank you very much for your time.